You're intelligent, you're educated, and you have the money. You know exactly what to do. You're going to invest in stocks in wonderful companies so you can build generational wealth. You can create freedom, security, not just for you, but for your family and for generations to come. It sounds great, doesn't it? There's just one problem. You are actually not doing it. You are not investing in stocks. Why not? Well, introduce 7 psychological barriers to investing in stocks. Let's dive in. First, a little story. I've been teaching investing for 8 years now. With my first cohort, I showed them absolutely everything. I even showed them what I was investing in at that moment. Apple, which is one of my favorite companies, it went straight down to one of the calculations that is a green light for investing. So I showed them, this is what I'm doing. I'm investing in Apple right now. When the course was over, it turned out that none of them had invested in Apple. And I was wondering, why? They're here to learn about investing. I had analyzed Apple right in front of them. I've showed them, this is it, I'm buying stocks. But they didn't do it. This is where I discovered one of the most important barriers to investing. It's the identity gap. Did you know that 70% of all lottery winners actually go bankrupt? They have more money than most other people, but still within a few years they go actually bankrupt. Isn't that insane? And you know why? It's because they don't see themselves as rich people. They still view themselves as whoever they were before. The thermostat of their inner identity is set to having money at a certain level. So they will sabotage themselves to become wherever they were before, to get back to that level. This might be keeping you back from investing in stocks. If you view yourself as someone who doesn't understand the stock market or who's not good at making money, then you will not be able to invest in stocks. So one of the first things you have to do is work on your identity. You have to change who you are, how you view yourself. I actually built a whole manuscript for my own life. So I decide, where is it I want to go? And I view it as a movie script. And just like in a movie, you need certain things to happen. You need a protagonist, you need a hero, you need some villains. In order for whatever action is taking place in a movie, you have to decide who is actually the hero who has to slay the dragons. So in order for you to be a really good stock market investor, you have to figure out, who are you to be able to do that? Write it down, read it every day, and maybe even record it and listen to yourself speak it every day. That's a great hack. Then there's this 7-year wait. Those are the people who are saying, wait a second, the market is at all-time high, it's gonna collapse, I'm going to wait. Well, the truth is there are always opportunities for investing in any kind of market. You don't have to wait for the next collapse. And it can take quite a lot of years for that collapse to happen. 7 years ago, some people were saying, wait, there's going to be a collapse. And here's the brutal truth. If you had invested just 100,000 in the big index Standard & Poor 500, it would have been worth 200,000 today. And that's a very easy way of investing. If you're investing in wonderful companies, the way that I really like to invest, it would have been worth even more. The truth is, you're actually really afraid of starting. And the truth is, it's probably the same in other areas in your life. Is there something you really want to do? Write a book? How long have you been waiting to write that book? Or could it be you want to start a new hobby, you want to learn how to play tennis or whatever? How long have you been waiting to do that? There's an action paralysis that is keeping you from doing things, and it's probably all over your life. So there will be a crash is probably just another excuse. There's always a better time for doing something. If you want to make up an excuse, you can always make up an excuse. What you have to do is you have to promise yourself to start. You have to promise yourself to do it no matter what. The third barrier is the 3-month analysis loop. This is you if you're analyzing, calculating what a company is worth, analyzing another company. You're never really happy with the result. It's never really good enough. What might be keeping you in this analysis phase is the idea that all the companies are too expensive to invest in, Well, you might be looking at it the wrong way. Are you looking at the part of the market where the opportunities are available right now? That means you have to look at where other people are going. For example, look at what the big investors are investing in. Go to gurufocus.com or dataroma.com and look at what the big value investors are buying right now. There might be some opportunities there. Another way to find golden opportunities is to look at the 52-week low. This is a list that will show you which companies are trading at the lowest level that the stock price has been in a year. You can find this list anywhere on all the financial sites. Just Google it. You'll find it really quickly. Did you know, by the way, that the fear of loss is much stronger than the pleasure of gaining? So if you lose 1,000 or 10,000 or whatever, dollars or pounds, doesn't matter. If you lose the same amount of money compared to what you could gain, the experience of losing that money is a lot stronger than if you gain that money. How do you overcome that? Well, you overcome it by realizing that there are such huge opportunities in stock market crashes, or not even stock market crashes. It could just be that the stock went down. Not even a crash. It's just it went down for whatever reason. Well, if it's a good company, that's a great opportunity. There is also the perfect company case obsession. This is where you do actually find companies that could be investable. They're reasonably priced on the stock market, but you keep looking for another one. You keep finding an excuse why this company is not good enough. And you know what this is? This is perfectionism. And you probably struggle with that in other areas of your life. The truth is, when a company goes through some sort of crisis and the stock price drops, it will feel very imperfect. This is where you have to analyze, but also be really rational about it. A lot of the flaws will be temporary. It might be that there's a temporary drawdown in one of their markets. It might be that the management isn't at top level and they're looking for a new CEO. There can be a lot of reasons why the company is not flawless. And the truth is, companies are more or less like people. People are not perfect. I'm not perfect. You're probably not perfect either. If you were, you would already be investing. But what we have to look at is the big picture. Is this a great company? Overall, is it a great company, but with a flaw that they can overcome? When we look at these so-called flaws, we have to think, is this a permanent problem? That's your question number one. Is it something they can overcome? If it's a permanent problem, then you have to ask yourself, okay, how big is this problem actually? Is it going to impact the core of the business? If it's not, it's still not big enough a problem to not invest. So you make this little tree of yes and no's of decision making. Is it a permanent problem? Yes. Well, then you have to look more into it. If it's not a permanent problem, if it's a problem they're already overcoming, keep analyzing. It might still be a good investment case. If it cannot be overcome, you have to figure out how big would the damage be? How big is the damage already maybe? Will it damage the company permanently? And how much of the revenue and the profit is it actually going to take away? So which kind of damages are really bad? Well, it could be, for example, that there's a new product is going to make their product irrelevant. That is a no-go. It could be that there is a serious problem of fraud. If they haven't been honest about the numbers, if you cannot trust the annual report, I would definitely get out. That's a big problem. We don't know what this company actually is. Another barrier is the information overload. This is where the world is coming at you with so much information that it's hard for you to discern what is important and what's not. It might be that you're thinking, but the interest rate is going to go up, but the interest rate is going to go down. How's that going to affect the market? But this is probably not a good time to invest because I don't know how it's going to affect the market. Or what if the next president is going to do something else? Are they going to overthrow the government, or will there be a recession within the next year? It's not exactly the same as fearing a crash. This is more like so many things are coming at you and you can't figure out if it's important or not. Well, most things happen in the world are temporary. When you look at a company to invest in it, you have to look really long term. You have to think like an owner who will stay in the company. Warren Buffett says that he likes to invest in companies where he could stay on an island without any news and not worry about that company at all. And that's the way you have to think. What's going to happen in 10 years? And when you think 10 or even 20 years ahead, most of the information overload becomes irrelevant. It doesn't really matter if the interest rate will be lower just a tiny bit, because it's going to be completely different in 10 years. It doesn't really matter if there's a recession next quarter and the quarter after that, because in 10 years, it's going to be a completely different situation. I like to say that you have to act like a horse in traffic. To keep horses calm, we put on the blinders. In that way, the horse won't get super stressed if there's a scooter going by, or a truck on the road, or a helicopter in the sky. For the horse, it's important to focus on the next step and the next step and the road ahead. And as investors, we should focus on the next step that we have to do and on the company we're investing in, on the long-term future of that company, and not all the noise that is taking place out here. The next trap is the not enough money trap. I have seen this trap so many times. I cannot count how many people I've spoken with who had even millions in cash. Kid you not, but still they were not investing because they had this feeling that they had to keep that money to be safe in cash. And this is really the equivalent of old granny stuffing cash into the mattress. If you are keeping that much cash on an account, you have a hoarding problem. Money likes to flow. Money likes to be invested, to be used for good things, good experiences, put towards a greater future. And the truth is that inflation will eat away at your savings. It will reduce the buying power of your savings. It's like having mice in your bread or your cheese, just eating away at it every day. You want your money to grow. That's the only sensible thing to do. Behind this barrier, there's a fear. There's a fear of investing. There's a fear of not having enough. There's a fear of losing the money. This is what I would do if I was hoarding money like that. I would start small, just to get used to investing and to not be overcome by fear. You could, for example, start with $1,000 invested in a wonderful company. Or if you're really someone who needs a lot of security, invest it in index funds. Invest an amount that you would comfortably use on a spending activity of some kind. Like if you were buying a nice dress for a wedding, what would you spend on a wedding dress? Not your own wedding, but someone else's wedding, for a nice party dress. Or if you're a man, a nice suit or loudspeakers for that special party. What would you say? Well, I'm using this and that's okay. And the amount where, let's say the worst thing happened and you lost the money, which is not going to happen if you do your research. But let's just say that it did happen. The amount should be at that size where you're thinking, well, I could have spent that money on a loudspeaker anyway, or a dress, or a nice bicycle, or whatever it is that when you go out, you spend money and you're like, yeah, I'll spend this money. In that way, you can still sleep soundly at night. When you start to see that, in fact, you're not losing the money, it's growing. This is where your fear of investing will start to evaporate. With experience that it's actually going to be fine, you're going to get more courage to invest more. There is also, I don't have time for this trap. While it's true that a lot of us are very busy, maybe you bought a house, it needs some renovation, maybe you have kids, there's a crisis at school, whatever. Listen, we all have busy lives. I can for sure sign that contract. I have 2 kids. I'm alone with them. We moved to Portugal. I don't have a lot of family here. And, there's just like birthday parties everywhere. And I also run 3 companies. Yes, and I have a dog. It's usually right here behind me on the couch. It left. I don't know. So, yes, I'm busy. I do this stuff. Of course, I know a lot of people who are really, really busy. The truth is, there might be another barrier behind this barrier. Usually it's like an onion. You're peeling off one layer after the other, right? So behind this, I'm too busy. What are you really encountering? What's the next layer? It might be, I don't know how to do this. It's so difficult, right? I think that's a very common one. It could also be, oh, it's so boring. And it's not. So if you have it's so boring, I have a really easy suggestion for you. Invest just a little bit of money in something you're researching. It's like if you can imagine you have a slot machine. whatever, a machine you can gamble on. It's standing there at the hairdresser or a bar, but there's no electricity in it. That's pretty boring, right? The moment you plug it in, it's gonna start like lighting up and ding, 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 and things gonna happen when you push the buttons. That is what's going on when you invest in something. So just put $1,000 in something you're researching. It will light it up because now you have money invested in it. It's your money. And that would make it so interesting to research it even more. So think about it. If you have a hobby that you really love, for example, let's say you love football, you love soccer, whatever you call it in your part of the world, and you like watching the games or baseball or whatever. Isn't it true that you really like researching the players and who won where and whatever? Well, actually, stock market investing can be the same. When you put your money on a company, that's your team, right? Those are your players. That's the game you want to watch. Once you start investing, it's going to develop from like having homework. And I think it might solve a lot of the other barriers too. Nothing is too hard for you if you know you already have money invested in it. You're going to figure that out. So that's what I would do. I would buy what I call some test shares. There are so many tricks to start investing in stocks if you're not already investing. Each of these barriers are psychological barriers that are trying to protect you. But honestly, they're not protecting you. They are guaranteeing that you will miss opportunities. The only dangerous thing here is not investing. If you do the work right, if you do your research, if you have a system, you will be fine. Your money will grow. It will make you feel really safe. It will create new opportunities for you. But if you don't invest and if you keep your savings in cash, several things will happen. First of all, inflation will eat away at your savings, like little mice, like I said. Secondly, you'll probably be spending a lot of that money. And thirdly, you will erode your self-confidence because you had a plan, you knew what to do, you know you're capable, and you have the money, and you're still not doing it. Little mice will eat away at your own self-confidence. When you promise yourself to do something, you have to follow through. It's so important. Your knowledge, your capability, your intelligence, your savings, it doesn't mean anything. None of it means anything if you don't act on it. You have to act. So shall we dive in and start investing? That's what I had for you today. Go watch another video.